Hi, this is Richard Flax from Moneyfarm with a regular monthly update. It's been a strong start to the year for financial assets, and we wanted to explore that in a bit more detail. Markets have rallied in the first few weeks of the year. We think there are a few reasons behind this. First, we've got slowing inflation, at least in the US and the Eurozone. And it's worth highlighting that energy prices have declined recently, a combination of warm weather and better supply of natural gas in Europe. A few months ago, there were fears of energy rationing this winter. Happily, so far, we haven't seen that. Second, we've got China's reopening, and that's an important support for global growth, we think. Third, we see decent macro data in developed markets, suggesting that those economies are doing relatively well in the face of higher interest rates, at least so far. And finally, in general, we're seeing corporate earnings holding up okay, even if expectations have come down a bit. Perhaps central banks will really be able to bring down inflation without pushing economies into a deep recession. That would be a pretty positive outcome. So what are the things that we're worrying about? Again, there are a few things to consider. First, we're seeing inflation come down, and that's really good news, but it's still well above central bank targets. One fear would be that inflation slows to a level above the 2% target that central banks have traditionally used, and then remains quite sticky. After all, we're still seeing the labour market in the US and the UK looking pretty robust, with wage growth well above that 2% target. That might mean central banks choose to keep interest rates higher for longer, and help to slow down the economy even further. Our second concern is that we might be opening the champagne a little too soon. Higher interest rates don't act immediately. It takes time for households and businesses to really feel their impact. The resilience we see today in some of these economies might just mean that the real slowdown is around the corner. That would have implications for growth and corporate profitability. And finally, we shouldn't forget geopolitics. There's still a war going on, even if energy markets have adapted rather better than we might have feared a few months ago. So where does this all leave us? The short-term outlook remains uncertain for economies and financial markets. The combination of resilient demand and slowing inflation is a good starting point for financial assets as we head into 2023. Thank you for listening, and look forward to speaking to you again soon.